Good afternoon, this is Paul Harris for Kitco News at the BMO Global Metals and Mining Conference. I'm joined this afternoon by Peter Marrone, Executive Chairman of Yamana Gold. Good afternoon, Peter.
Good to see you, Paul.
Thank you. Let's start with the gold price. The gold price has had a nice lift today. In the last couple of weeks, it's had a pretty good lift. How important is that for a gold producer such as Yamana Gold?
At the end of the day, we all want to measure ourselves based on financial performance, operational performance, independently of gold price. To say it differently, even if gold price were substantially below where it is, we're still making money for our shareholders. But it's nice to have a tailwind of gold price being as healthy as it is. The way we look at it is we want to be making money at $1,200 gold. And if gold is at $1,600 or $1,700, then that's all upside for our shareholders.
You've spent the last few years repositioning the company, refocusing the company, sort of trimming assets, and now your share price has recently hit a 3-year high. So do you see that as validation for the actions you've taken to make the company a healthier, better company?
I certainly see it as validation, but we have hit a 3-year high, but not an all-time high. And I think that there's a lot of room for upside in our share price. And hopefully what we've done to reposition the company, to improve the balance sheet, to improve the quality of the portfolio of assets, to look at what we consider to be inactive assets and where we could be monetizing those assets or finding some other way to deliver value from those assets, will at some point reflect itself in an even higher share price. I'm confident that it will.
Okay, Yamana's been paying dividends for several years now, and recently you've been increasing the dividend you're paying out, and you've established the dividend reserve fund to provide sustainability to your ability to pay out. How important is it for a gold producer such as Yamana to pay dividends to attract new investors, to attract the generalist investor?
I think it's critical. It's critical not only to attract investors, but also to ensure that one trades at a respectable multiple. In 2012, we were paying a dividend that was higher than the level at which it is at today. And our multiples to cash flow were significantly higher than they are today. So certainly we see the dividend as correlated, not in every way, but correlated in some fashion to a higher share price and to a better multiple. We've paid, it's an interesting question that you asked, Paul, we've paid more than $900 million of dividends since 2007 when our Chapada mine first came into production. We declared our first dividend in late 2006 and paid it in early 2007. Since then, we've paid more than $900 million in dividends. That's a very significant amount. It's roughly 1/4 to 1/5 of our total market capitalization today. So clearly we see dividends as important. Returning cash value to shareholders is very important. Of late, we've adopted a new approach, which is not just to look at dividends as a yield to share price and to cash flows, but also, since we measure everything else in our industry on a per ounce basis, what is it per ounce? And so we're paying $50 per ounce. We think there's room between $50 and $100 per ounce. And interestingly, in 2012, we were paying about $100 per ounce. So we certainly see that there's upside.
Okay, and I guess with higher gold prices, it perhaps becomes a little bit easier to try and push for that again.
That's the rub. The challenge is that we're price takers in this industry. We don't set the price of the metal that we produce. And so we've come up with a possible solution to that, which is what if we create a reserve fund, what we've called a dividend reserve fund. And that dividend reserve fund protects the dividend at whatever level it is at. Today it's at $50 per ounce, so about $50 million of dividends for at least a 3-year period.
Was the creation and maintenance of the reserve fund the key driver for the creation of the Nomad royalty company that Yamana's participated in? It was announced this morning, to be able to provide that sustainability to the reserve fund and the dividend.
It's part of a broader plan. I would say that the better correlation between the royalty company and the cash that we receive on the closing of that deal, the closer correlation is really to the generative exploration program that we announced last week. So that generative program over the next 3 years will require $53 million, but we think we may have certainly another deposit and perhaps even another mine in that portfolio of assets, mostly in Brazil and in Canada. But what we want to do is we want to pay for that rather than through our cash flows, and our free cash flows in particular. We want to pay for that through other means. Cash is fungible at the end of the day, but our idea is to take inactive assets and apply them to active assets.
Okay, you spent recent years sort of trimming assets, getting the company into a fitter, healthier shape. Now ramping up in exploration investment around your existing assets. Is that where you see the future growth or the growth over the next few years coming for Yamana Gold?
Well, we see growth in several ways. That we will have growth in production in the next several years. Admittedly, it is modest. It's in the range of 2 to 5% in the next few years, but that's pretty significant. Where we're really more focused is on growth in free cash flow, growth in cash balances, growth in the financial measures. So what we're looking at is a modest growth in the next several years of production, but that contributes very handsomely to the bottom line, or at least to free cash flow, and then what we can make available to shareholders. And the reason for that is because we're into a harvesting mode at this point. Our capital, our expansionary capital is low and in decline by comparison to where it was a few years ago. And that means that more of that cash flow translates to free cash flow and is available for other purposes, including cash returns to shareholders.
And you're now an approximate sort of million ounce a year producer, so you're pretty much a senior producer by many definitions. Senior producers are paying much more attention on ESG aspects. That seems to be becoming a more important part of their business plan and how they see the sustainability of their business going forward. To what extent is Yamana Gold looking at sort of developing and really strengthening its ESG aspects going forward?
Well, it has always been an important part of our business. This company was founded, I took the company public in 2003, and ESG, what we're now calling ESG, health, safety, environment, community relations, has always been critical to how we manage the business. I would say I would put the inflection, I would put the focus on something a bit different. It has become more of a focus of investors rather than of mining companies. Okay. We as a mining company have always been interested in ESG and wanting to promote high quality health, safety, environment, and community relations. It has become more of a focus of investors, and good for them. I think that it should be a focus of investors. Our view has always been, from the beginning of this company, and will continue to be into perpetuity, that to the extent that we protect our workers, to the extent that we protect our environment, that we care about health and safety and environment, community relations, we actually make it a more sustainable business and we become more profitable.
Okay, Yamana for many years has been it has always been an America's focused precious metals producer, and for many years you were pretty much alone in that space, but recently there's been other companies coming into that space, perhaps most notably the merger of Equinox Gold and Lee Gold, that within a few short years will be 700, 800, 900,000 ounces of production. To what extent does the companies like that help keep Yamana Gold on its toes?
Well, competition is good. But I don't know that I could agree that it is a new phenomenon in the Americas. North and South America represents exceptional opportunities. What we care about more than a North-South axis or North America and South America is quality jurisdictions in the Americas where there's mining pedigree and support for mining. We have established platforms in those countries, so I think we'll always be competitive. But interestingly, and to go to your premise, we cannot overlook that during the life of this company, our greatest competitor, if I can put it that way, in the Americas was Goldcorp. Okay. Goldcorp was certainly an America's company, and we were often in each other's backyards, and I think we held up pretty well.
Yeah, and you've really sort of pioneered or been very strong in emerging market jurisdictions such as Brazil, such as Argentina. You invested in Argentina a few years ago when everybody else was looking for the exit, and that seems to have paid off.
Very well. And in Brazil, if I go back to the period of about 2003 to 2006 perhaps, maybe 2005, in almost every corporate presentation we had to talk about the country before talking about the assets. Yeah. It was not very well understood. And today it becomes more apparent that people feel a comfort with the country. We see Argentina in a similar way. We've had a platform in that country and owned assets since 2006. We've known it individually as executives longer than that. And so we think that Argentina certainly is a country that can become a very high quality country for mining. Yes, there are certain socioeconomic, geopolitical issues that are taking place, but Argentina is promoting mining. In the first time in a very long time, it sees mining as an enterprise that should be promoted in the country. And we applaud them for that.
I think that's one thing we've seen with the new president of Argentina. He sees mining as a means to break the boom-bust economic cycle in the country. That must be a welcome support to hear from the central government.
We think it is exactly where the country should be. That sort of support at a national level, at a presidential level. What I admire about this particular president is that he appears to be practical more than an ideologue. He is looking for the betterment of his country and the betterment of the people in the country. He sees mining as an enterprise that should be promoted. He sees responsible mining as a way to promote mining. And we encourage that, we applaud it, and we think that is a path forward. Argentina has exceptional opportunities of many metals. One of those assets in the country is our Agua Rica mine, our Agua Rica project to be precise. Agua Rica is one of the larger copper, gold, molybdenum projects in the world and one of the lowest capital intensity projects in the world. It should be developed. We own 56% of that project, along with our partners Glencore and Newmont, what was before Goldcorp. We think it should be developed. We're taking it through the development cycle. We're encouraged to be in the country developing an asset like that.
Okay, Yamana's still a growing company. Still got a lot of projects on. Yamana's your baby, you've been there from the start, and through the spin out of Brio, you've become a board member of Lee Gold. You'll be a board member of Equinox Gold as and when that merger completes. Doesn't that create a certain sort of tension or challenge or even conflict to be high up in two very big Latin American focused gold companies?
My highest priority is protecting Yamana. Equally, protecting its investments is a priority of this company and a priority of mine. I sit on that board of directors because we are a large investor in Lea Gold. We own 20% of the stock of the company as a result of disposition of assets into that company that got us that share position. We will own just under 8% of Equinox. And for so long as I feel that we should be protecting our investment, I will, or someone in our organization will maintain a board position on that company. I don't see that there's a real risk of conflicts of interest, but if were there to be that risk, then we will manage it as appropriately as is required under good governance, high quality governance rules. But I think that they've got an excellent opportunity in Equinox for organic growth that cannot be overlooked. It's fully funded on organic growth that takes that company from a production platform of roughly 600,000 ounces to close to 1 million ounces. So it's very significant growth. And equally, we have an excellent portfolio of organic opportunities as well. I don't see that there's, certainly in the foreseeable future, any risk that we'll both be competing for the same assets.
Okay, and to close up, if everything goes to plan, where would you like Yamana Gold to be by the end of the year?
Well, I'd say that at the end of this year, I'd like to continue with what we've done. It may sound a bit boring, and my apologies to you and to your viewers for that, but really the success of this company for the last several years has been to continue to focus on its strategic and its business plan. Continue to look at inactive assets, deliver value from those assets, in some cases requiring a monetization of those assets, and applying those proceeds then to shareholder returns, applying them to improving balance sheet so that we create financial flexibility, and applying them to more active parts of the portfolio. And finally, making sure that we continue to deliver quarter over quarter and year over year on our production and cost goals, and delivering to that bottom line of free cash flow.
Excellent. Well, thank you very much, Peter.
Thank you.
And thank you for watching, and stay tuned on kitco.com for more from the BMO Global Metals and Mining Conference.